don't have any guests next week,
Oh.
so I'll have to figure this one out.
Oh, there's no other guest hosts?
For next week, yeah. So I'll play with it.
Get one of the other guys to come in.
That's all I'll do. Here we go. Welcome. You're listening to The Best of Investing on Talk 910. I'm your host, Edward Brown, and I'm proud to have as my co-host Mark Hanf of Pacific Private Money, one of California's fastest growing mortgage investment firms. Our phone number is 888-912-1190. You're going to use that number to answer the trivia question for 3 vacations given away during this show. And the vacations are not sponsored by the radio station, but by Lighthouse Resort Marina, located 1 hour northeast of San Francisco. Those vacations are free. Their only request, a $75 cleaning fee to cover the housekeeping expenses. Today's trivia theme is kind of strange. It's They Died in the Lyrics. Music where somebody died in there. Okay.
I know a few of those songs.
You do? Okay. Our website is bestofinvesting.com. Check us out on television, Comcast Channel 26, AT&T Channel 99, Saturdays at noon, Sundays at 6 p.m. Mark, you know what? I want to get right into an email that we received.
Oh, okay.
It says here, I went to your website and I noticed that I have to be an accredited investor. Why is that? Please answer on the air. I don't want to...
Well, that's a good entree to a discussion about investing and investment options out there. And for those of you who've been listening to The Best of Investing for a while, you've heard us talk about an alternative investment opportunity that at Pacific Private Money we make available to our clients, and that is, it goes by many names, but we oftentimes refer to it as mortgage investing. That includes investing in individual deeds of trust. It also includes investing in a mortgage pool fund. And at Pacific Private Money, we actually offer both options. You can invest in individual notes, and you can invest in a mortgage pool fund. Now, our particular mortgage pool fund, as many mortgage pool funds are designed, we fall under certain we fall under a certain regulation of the SEC that only allows us to accept deposits from accredited investors. And the term accredited investor is defined as someone who has a net worth of $1 million or more, not including the equity in their home. So they're looking for we're looking for a certain level of sophistication and net worth. And again, that's not by our design, but basically how the law is set up.
Yeah.
So for our mortgage pool fund, you need to have a minimum net worth of $1 million or higher, not including exclusive of the equity in your home. Now, on individual notes, that's not the case. Now, of course, we do have other guidelines, like the Department of Real Estate, now called the Bureau of Real Estate, has a form that we have investors fill out if they're going to invest in an individual note. And that basically has them stating that the individual note does not comprise more than 10% of their net worth. So while you don't need to be an accredited investor, we discourage people from putting all their eggs in one basket.
Sure.
So that's essentially what how that works. And what's interesting about our mortgage pool fund is that many people who listen to KKSF regularly have heard our commercials by Gil Gross on his show and elsewhere on the program advertising the fund. And we've, I got to say, we have more and more people lately calling us because of what's happening in the stock market. The stock market has been very volatile lately, and it had a very poor performance in the third quarter. It was down quite a bit in the third quarter. Of course, when you invest in the stock market, you shouldn't be watching it on a quarter-by-quarter basis, and certainly not on a daily basis.
Some people on an hourly
I know
basis.
The Dow's up today, the Dow's down tomorrow. I mean, it just drives you nuts. But overall, so far in 2015, the Dow's and the other indexes and many mutual funds have been underperforming, and many people who write about investments are beginning to write and predict that stocks or be prepared for stocks to underperform in the next several years. They don't, and this is not everybody. This is not necessarily the vast majority, but
So what's an investor to do?
That's exactly right. I get a lot of investors call up and they tell me, I just don't believe that the stock market is going to produce for me the types of yields that I need to get in my retirement portfolio.
And the banks are not paying the interest rate that most people like.
Right.
So.
It's funny. I've got an article with me that says that in all recorded history, today is the best time to borrow money. So interest rates have never been as low as they've been now for many years. But it's actually the demand for money is just such that interest rates are likely to remain at or near zero for
It's
many
just
months.
people are just not borrowing still.
Not
scared of the crash before.
well, there's a lot of factors that go into why interest rates are as low as they are. But I'm seeing more blogs saying that the Fed may not raise rates this year. So it's funny how the tide continues to turn. And so we may see, now when we say near zero, that's not to the average person. I mean, if we go out and get a home mortgage, it's still going to be, around 4%, 3.75% to 4%. But the cost of the money that banks get to borrow, the federal funds rate is about as close to zero as you can get.
Yeah.
So what's an investor to do? Well, at the Pacific Private Money Fund, we've been producing yields at an annual rate of more than 8% for 27 straight quarters now. We launched in the spring of 2013. We've done over 1,000 loans inside and outside of the fund, all of which have performed as very
20 months worth. Yeah. Wow. Excellent.
But for the last 27 plus months, we've produced monthly distributed yields at 8% or higher, and the range is anywhere between a little over 8.0 to about 8.5. And right now, our year-to-date distribution is at an annualized rate of 8.15. So, and that's on a mortgage pool fund with a loan-to-value ratio, weighted average loan-to-value ratio of under 60%. So pretty conservative loans.
Yeah.
We don't use leverage to create that yield. It's a pure yield based on the notes that we make, short-term loans that we make, bridge loans that we make to our borrower clients.
Well, to me, that's the most important thing is the preservation of principal.
Absolutely.
If you're doing loans at less than 60% or around 60% LTV, even if there is a drop in the market, you're still well protected, which is the reason why nobody's lost money yet.
Well, and of course, I'm going to say I think this is the greatest investment known to man. I will say that others who are not me have written that mortgage investing is one of the best kept secrets in investing today. And I will say, and this is with all frankness, that I don't know of any investment where you have as much protection of capital and protective equity as the type of loans that we make on a daily basis, 70% loan to value and less, oftentimes much less, and where you can make an 8% yield with that kind of security. I mean, basically, when you invest in a mortgage, you are the bank. You are Bank of America. You're playing Bank of America when you do that, and your money is as protected as any loan that Wells Fargo, Bank of America, Citi, or Chase makes on a daily basis.
Well, the audience is waiting for you to give your
course.
information.
So go to our the fund has its own website. It's called PacificMoneyFund.com. Go there and you can get some information. You can also fill out a very easy your name and email address, and we'll shoot you some additional information on how the fund exactly works, including our offering memorandum. For our brokerage website is PacificPrivateMoney.com. Either one of those websites, you can get information on how to contact us. We're right here in the Bay Area. We have over 30 years of Bay Area real estate experience, and we can be found at 415-883-2150. Call us now, leave us a message. We'll call you back next week. That's 415-883-2150, or go to PacificMoneyFund.com for more information.
Yeah, it's one of the things I like too is that you pay monthly distributions. So hey, before we go to our first commercial break, I just want to do a little shout out here for one of our newer sponsors. We call him Dr. Vadim. He does dental implants, and he's an experienced implant specialist. So we're talking, dental implants here. You can look younger and these implants can last a lifetime. And they have a holiday special. Schedule your free, no-obligation consultation with Dr. Vadim at his San Francisco or San Jose office before December 25th and receive implant, abutment, crown, which is the whole tooth, for only $1,998.
Can we say implant abutment on the
Yeah, we can. And that sounds very reasonable because I know these things can get very expensive, but that's a very reasonable price.
Awesome.
So he's offering such a low price to attract new patients, hoping that the satisfaction will make you want to stay for your future dental needs. And additional discounts are available for seniors and veterans and uninsured and unemployed. So call him now at 415-992-5800. 5160. Leave a message. He'll get back to you on Monday. You can also check out his website, www.smiledelightdental.com. Again, give them a call, 415-992-5160. And let's see, our first commercial break, we are asking, they died in the lyrics, right? How was Earl killed in the Dixie Chicks song, Goodbye Earl? Now, I don't know the song, so I'd never get this one. The first caller with the correct answer wins a free 3-day, 2-night stay at the Lighthouse Resort. Call 888-912-1190. That's 888-912-1190 to answer this question. How was Earl killed in the Dixie Chicks song, Goodbye Earl? All right, make sure that you spell out your email spell out your email one letter at a time. Don't touch that dial because the best of investing will be right back. All right. Kramer.
We started without you guys.
Kramer, you are way too funny. You make me laugh. You make me laugh.
Yeah, but you can laugh. See what